Hello and welcome to the Strategy of the Week tutorial for 8th of November 2013. My name is Steve Chappell, the Director of Educational Services here at VectorVest. The title of our presentation this week is Chappell's New Buys, as we'll be featuring a brand new search for the Australian share market. For a small part of the presentation this evening, we will be featuring one of our add-on tools called the Auto Tester, as we'll be doing some back testing. For that reason, we are enclosing a very special offer in tonight's edition of the VectorVest Views, where you can receive $100 off the purchase price of Auto Tester after a trial period. However, it is important to note that you do not need the tool to be able to pursue this strategy moving forward. All you need to know is the concept. And with that out of the way, let's jump right in the program and take a look. So here we are at the home page for VectorVest 7 Australia, and we'll begin our journey on this strategy of the week by taking a trip to the Unisearch tool. To get there, I'll take my cursor right up to the top and click on the Unisearch tab. Once there, we'll see our directory of searches on the left. I'm going to scroll all the way down to the bottom, and we're going to go to the Trends New Stuff folder. It's in here that we house the brand new search, Chappell's New Buys. When I click on the search, it'll list the criteria over on the right-hand portion, and the trend is enclosed right in the very top line of criteria. It says here that the stock recommendation is trending weekly from not a buy to equaling a buy. One important thing to note is that when running a weekly trend, we are looking at Friday to Friday data. So when we talk about a buy as of the time of search, it's going to compare it to the prior Friday or the last trading day of that week. In our next line of criteria, we also have a very interesting line here that says stock RV plus RS has to be greater than 2. Now, if we think about that, relative value, the upside potential of a company, is on a 0 to 2 scale, and relative safety, the consistency and predictability of financial performance, is also on a 0 to 2. When you combine those two together, the composite score would be 0 to 4. So in this case, we're looking for stocks who have at least some fundamental reason as to why we want to follow up on the buy recommendation. It may be that they have a relatively high RV. It may be that they have a relatively high RS. Or it could be that they have a nice combination of the two. In any case, again, the fundamentals are in play. Our next line of criteria is that the stock price has to be greater than 1, and that the average volume has to be greater than 25,000 to give it some general liquidity. If we run the search on today's day, we'll find all the stocks that are just becoming buys compared to last Friday that also meet the other criteria, and we'll sort them by the Chappell's Champs sort, VST times CI times growth rate. And so this is where the new strategy gets its name. We're looking for good quality VST stocks that have strong price growth persistence and also strong forecasted earnings growth rates, which is a wonderful combination. Again, we're looking for great quality stocks that rise in price more often than they fall and that have strong forecasted earnings. The stocks that exhibit the best combination of those characteristics percolate right up to the top of the list. And so that leaves us with Amcor Limited today. We have a price of $10.80. If we look at that in relation to its value, it's an undervalued stock. That's a very positive sign. Now, the criteria said RV plus RS has to be greater than 2, and in this case, it's far greater than 2. Certainly, it has at least that dollar price point. As we scroll across to the right, we'll see that it has a strong earnings growth rate. As we get to the volume criteria, we'll see that it has a nice bit of volume to it as well, so far and above that 25,000. And perhaps even more importantly, it has a very strong CI on a 0 to 2 scale. So here's a stock that tends to go up in price a lot more often than it goes down on a long-term basis. Certainly we can see that it has a buy as of the current date. If we want to compare that to not being a buy, we can simply right-click on the stock and view the historical data. Clearly we can see the buy mark today. And as we look at the prior Friday, we can see that we're working off of a hold. So it could have been a sell, but in this case, as long as it's not a buy, it fits the criteria. Another nice thing to see is we are picking it up relatively early since the first few buy recommendations have come in. In some cases, we might catch it on the very first buy, which would be, in many cases, an even better opportunity. But we're catching it still fairly early. And so that's the hope. We're going to run some testing over the last calendar year and see how well this strategy would do if we just took the very top stock from this search on the day of a green light and held them up until a confirmed down call unless they hit their stops along the way. So to do that, I'm going to go ahead and close out of this. I'm going to go up to the back tester tab, and in here I'm going to click New. When I do that, I'm going to use all the general account settings. I'm going to go to the market timing area, and here's where, if you don't have auto tester, you may not see this functionality. If you have auto tester available on your account, you'll be able to use market timing. I'm going to change it to the green light buyer, which again means we'll pick up shares the following day from any green light that populates in the price column of the color guard. We'll continue holding stocks long until we get to a confirmed down, where we'll go to a cash position. If there's not a green light in the price column, all we're doing is letting our stops manage the current positions that we have. And we'll get more in depth on how we're going to manage them in Automation Rules Up. So if I go to the next section, here we're going to pick our search. We'll go right back down to Trends, New Stuff, Chappell's New Buys. Now I've done a bit of research before tonight's presentation, of course, and so we're going to use a lot of the optimized settings that I came up with. If I click on percent gain loss, we're going to use a 30 gain or a 10 loss. I'm going to go to more settings. We're going to carry a maximum of 5 positions, which tends to work very well in the Australian share market on the whole. We're only going to open 1 a day until all 5 are reached. We're not going to close any open positions. Now this would prevent us from rebalancing on each and every green light during an upturn. As you've seen, we can have several green lights in a row, and we wouldn't want to rebalance that portfolio. If I continue a bit further down, we are going to leave it in odd lots to try to stay dollar weighted. I am going to limit repurchases to 31 days. We'll leave all the other settings the same. So we'll go to Automation Rules Down. And again, we're going to go to Cash on Confirmed Down Signal. And again, on Neutral, we're just going to let our stops rule the positions that we currently have in the portfolio. For our test period, we're going to test this calendar year. So I'm going to change it to December the 31st. And this would work off the first green light that we had in 2013, which was the 2nd of January. And it would buy as of the next day's open for the first position. So as of the morning of the 3rd. Since there's not a color change, on the 3rd it's also going to buy the next position as of the morning of the 4th. And then we'd pause and wait until the next green light. From here, we'll just give it a name. And we'll type in the stops that we elected to use, which is the 30-10, along with the 1 per green light. All I've got to do now is click Finish and Run. Boy, isn't that a beautiful curve? Now the nice thing about what we're looking at as far as the current display, you can see little green triangles for every occurrence of a green light in the price column of the color guard. And in some cases, that may run over consecutive days. You can see how the green shading covers multiple days in the case of that green triangle. So again, this is a reflection of the green light in the price column of the color guard existing on those days. If I just quickly make a departure to the home page, Our last green light that we've seen most recently was 5th of November, and you can see how it switched to yellows and reds. So right now we wouldn't be buying any stocks as of the next day. We're just managing the positions that we currently own. If we receive a confirmed down call, we'd simply roll into a cash position. But right now you can clearly see we're still in the confirmed up. Back over to the back tester. And let's take a look at some results I've got for us. We end up with my optimum run here of the 52% gain over this calendar year from the beginning of the year till now. Tremendous return. We had 66.67% winning trades on only $860 of commission. Our annualized rate of return comes in at over 61 and our compounded at 63 with a maximum drawdown of just 6.8%. And that's a reflection of how solid the equity curve was. So the largest peak to the deepest valley was only 6.8%. It may be interesting for some of you to see that during the research, I did analyze the process of going in one at a time versus jumping in, say, 2 at a time, or even 5 at a time. If we jumped in 2 at a time, in some cases, this may lead to higher profitability with a little bit more drawdown on the norm. In this case, it actually dropped a percent gain a good little bit down to 38.5% roughly. The other thing that we saw when jumping in with more stocks on each of the lights was a higher drawdown, just a little bit there. Now, if we jumped up to 5 positions, starting right out of the gate with all 5, and adding as many as up to 5 throughout the course of the test, of course, the commissions just went up a little bit, but the drawdown became far more substantial, and the gain really evaporated again. So it looks like, at least with this methodology, the sort is extraordinarily important at putting the prime target, the prime candidate, at the top of the list. And then as such, only picking up the very top candidate on any day that there's a green light in the price column of the color guard. So if we take one last look at this beautiful performance from our final portfolio, this looks like the clear-cut winner. Again, we use the Chappell's new buy strategy. We buy the very top stock the morning after a green light is issued in the price column of the color guard. We immediately attach a 30 gain or a 10 loss, and we continue to build up to a portfolio of 5 positions. When a confirmed down is received, we go into cash, and if we ever hit a neutral situation where there's not a green light in the price column of the color guard, for example, we are not going to pick up any new positions during those periods, and we're simply going to let our stops dictate what happens to the contents of our portfolio. We'd sell at a 30% gain or a 10% loss on each of the positions, whichever happens first. And so, folks, it's really that simple. I think this is a great technique. I want to thank you for attending our presentation this evening, and we hope to see you again next week right here at VectorVest University in our Strategy of the Week presentation. Have a great week, folks.